Welcome back. This week's episode is going to be a deep dive into Shopify. With their extremely strong revenue growth, their expanding margins, and the success in their various service offerings, Shopify is really positioning itself for a dominant future. And I think this company could even become $1 trillion company within the next 10 years. We'll discuss a few things in this video. First, we'll look at how Shopify makes money and its competitive position in e-commerce. Then we'll take a deep dive into the 2024 financial performance, including revenue, margins, and free cash flow. And we'll look at their latest earnings report, which came out on February 11th. We'll look at the company's biggest strengths and weaknesses moving forward. And then we'll look at Shopify's valuation. Are shares undervalued or overvalued at the current prices? We'll look at any growth catalysts and whether this company has long-term potential. And then I'll give you my personal action plan when it comes to Shopify stock. Before we start, yes, Shopify is currently a stock that I own. After their recent earnings, this became the second stock that doubled up for me. So it reached over 100% in gains. The first one was SoFi. But despite these gains, I continue to be bullish on the company. When you think about Shopify, you probably think about the cloud-based e-commerce platform and the subscription revenue that they bring in from that. But Shopify is so much more than that now. The company generates revenue through two primary components: a recurring subscription component that they call subscription solutions, and a merchant success-based component that they call merchant solutions. To explain what falls under the subscription solutions, let's take a look at their 10K or their annual report. By the way, if you're studying a company, it's incredible how much you'll learn by reading their entire annual report, and I think you'll know more than 99% of investors if you do so. Anyway, they describe subscription solutions as: we generate subscription solutions revenues primarily through the sale of subscriptions to our platform and from variable platform fees, as well as through the sale of subscriptions to our Point of Sale Pro, POS Pro offering, the sale of apps, the registration of domain names, and the sale of themes. So that's primarily the Shopify subscription tiers here. And as you can see, they offer subscriptions for companies of all sizes. And as those companies grow and their need for Shopify grows, Shopify can provide and then collect more money from their customers. And notice that these subscriptions all include POS Lite. And then we have revenue from POS Pro, which basically just provides extra features for in-person sales. So your bigger retailers would likely go with this add-on. And as you can see here, that's an additional $89 a month for each location. And these are both recurring revenue streams. And what's beautiful about that is when businesses start using them and continue to use them as they succeed and get used to the service, the cost and inconvenience of moving to a different service is so high. And that's why Shopify can raise prices to support their fast-growing revenue, like they did in April 2023 when they raised the basic plan from $29 to $39, the Shopify plan, the middle tier plan, from $79 to $105, and the advanced plan from $299 to $399. And then in 2024, they actually also raised the Shopify Plus plan from $2,000 a month to $2,500 a month. But as I said, there's so much more to Shopify than that. In fact, the subscription solutions revenue was only about 24% of their total revenue in the last quarter. So that brings us to the merchant solutions, which again, from their annual report, is described as: we offer a variety of merchant solutions to augment those provided through our subscriptions and to address the broad array of functionality merchants commonly require, including accepting payments, securing working capital, and shipping. We believe that offering merchant solutions creates additional value for our merchants by passing on our economies of scale, saving them time and money by making additional functionality available within a single centralized commerce platform, and creates additional value for Shopify by increasing merchants' use of our platform. We principally generate merchant solutions revenues from payment processing fees and currency conversion fees from Shopify Payments, our fully integrated payment processing service that allows our merchants to accept and process payment cards online and offline. We also generate merchant solutions revenue from other product offerings, including our lending and financial products, referral fees from partners, and the sale of shipping labels. So to break that down a little bit, you have Shopify Payments, Shopify Capital, Shopify Shipping, uh, Shopify Magic, which is their new AI offering, and the sale of point of sale hardware, advertising on the Shopify App Store, and the shop campaigns. So, as I mentioned earlier, Shopify Payments is a payment processing service that allows merchants to accept and process payment cards online and offline. Then we have Shopify Capital, which lets eligible merchants secure financing or loans. And what's really cool about that is Shopify already has all the sales data on those lenders. So that can really help them make better decisions when they decide who to lend to and how much to lend to them. And they can actually collect repayments on those loans by taking a percentage off of that merchant's or that store's um, daily sales. So, in a way, they can ensure that the lender pays. But obviously, sales can dry up for that merchant, and lenders could end up not paying back the loan. So, that's always a risk with lending. But this is such a smart system, in my opinion. Then we have Shopify Shipping, which is the sale of shipping labels, which is kind of small. Shopify Magic, which is an AI-driven assistant for business operations. It's a relatively new segment. The Shopify App Store, which is a marketplace for third-party apps that pretty much extend the functionality of Shopify stores and integrate with outside platforms and services. And the way Shopify generates revenue from that is through profit sharing on those apps that are sold. So they take a split of the profits. Then they sell advertising slots on the marketplace, and they even sell their own apps and themes. And lastly, we have Shop Campaigns, which, as Shopify explains here, is a customer acquisition program that helps you acquire and convert customers at a set cost. Each campaign includes an offer with incentivized purchases with extra shop cash or special pricing from select brands. You can create campaigns that target new or lapsed customers in the United States or Canada. When you use Shop campaigns to run ads on Shop and other platforms such as Meta and Google, you pay acquisition fees only when a customer converts on the Shop app or shop on the web. And with all of those products and services, Shopify is really starting to build an ecosystem or an all in one platform where merchants can get pretty much everything that they need, and it all integrates seamlessly together from online sales to offline sales, marketing with shop campaigns here, payment processing, even loans, and obviously the thousands of apps on the Shopify App Store. And that just comes from how established they are in the e-commerce industry. Moving on to the financials and the latest earnings report. Starting with revenue, let's look at this wonderful drawing I made. This is a yearly chart. Um, this company is growing revenues at 25% and up, which is incredible. And here in 2020, they started with $2.9 billion. Then they had 57% year over year growth to $4.6 billion in 2021. And this was really the COVID pandemic boom, with all the stimulus checks, and all the inflation that we saw there. Sales of pretty much everything was just through the roof. But the year after that, their growth was 17% to $5.6 billion here. So the growth rate slowed significantly. But the year after that, we saw 21% growth to $7 billion roughly. And then 26% growth to 2024 with almost $9 billion. And basically, we're seeing this re-acceleration in growth rates. But if we bring this down to a quarterly chart here on a trailing 12-month basis, just look at how smooth the revenue growth is. And that's what you'll get with these subscription-based businesses a lot of the time. The cost of acquiring and especially setting up new customers is not high, and it just scales. And with a service like Shopify, the subscription fee really just becomes a cost of doing business for these businesses. And these companies just stay subscribed every single year because the majority of their business operations happen through this service. And they end up just getting sucked into this ecosystem. And I don't know if it's just me, but I've been seeing so many Shopify ads recently and so many different ones. So it really seems like they're investing in more revenue growth. And if we look at their EPS here, the past 3 quarters have been profitable ones. So that revenue is really starting to turn into profits, and they're keeping some of that money. And you can see that with the free cash flow here too. The free cash flow is really starting to explode. And if we look at the stock-based comp here too, which is their stock-based compensation, what they pay their employees in stock options, they're really getting that under control and reduce that here in 2024, which is good to see. If we look at their cash, you'll see they're such a asset-light business, loaded with cash, so they can really continue to invest in that revenue growth and even get through tough times if we happen to go through that in the coming years. If we take a quick look at some of the valuation metrics here, companies currently valued at $160 billion roughly. Their forward PE is 82, which is high, but when you have a company growing revenues 25, 26, 27% per year, you should expect a higher valuation, especially for a subscription-based company like this. Yeah, price of sales of 18.1 roughly, which is, to be honest, really high and way above some of their competitors. Um, but yeah, Shopify, in my opinion, super high quality companies, high growth company. So therefore it's valued very richly. Next, let's look at some of these highlights from their latest earnings report. So they highlight crossing the milestone of $1 trillion in cumulative gross merchandise volume, which is the total dollar amount of orders processed through Shopify stores. 2.4 times more gross merchandise volume than 2020, 3 times more revenue than 2020. So in just 5 years, they've tripled that. That brings them up to 7 consecutive quarters of 25% or greater revenue growth, excluding logistics. And logistics was this Amazon-like logistics or delivery business that they were trying to do, which they ended up selling in 2023. So as we saw earlier, their net income and their free cash flow was negative, and that was really because of this logistics business, because it was so resource intensive, so capital heavy that it was just losing money quarter after quarter, year after year. They ended up selling that in 2023, and since then their net income is back on track, and their free cash flow as well. Then they reported $1.6 billion of free cash flow generated in 2024. That brings them up to 9 consecutive quarters of positive free cash flow. And I really like that they're highlighting this because free cash flow is very important to me when I look at a company. With that excess cash, they can buy back shares, they can maybe pay a dividend in the future, or just invest back in their business and grow it faster. If we look down here, 33% international revenue growth. So their international business is growing even faster than the US business, which is great to see. Obviously, international is going to be a way bigger market over time than the US market. 33% offline revenue growth. So the point of sale systems are growing well as well. 50% shop pay, gross merchandise volume growth. So shoppers are really starting to use Shopify's checkout system. And that brings them to over 200 million shop pay users. They also highlight here that they have around a 12% US e-commerce market share. But as someone who has built these websites and stores in the past and used a lot of the different e-commerce providers, I personally think that Shopify service and offering overall is the best. Next, let's look at their future expectations. So they say here that we expect the strong merchant momentum from Q4 to carry over into Q1, recognizing that Q1 is consistently our lowest gross merchandise volume quarter seasonally. With that backdrop, for the first quarter of 2025, we expect revenue to grow at a mid-20s percentage rate on a year-over-year basis. So continued strong growth. even at their current scale. Um, Gross profit dollars to grow at a low 20% rate on a year-over-year basis. Operating expense as a percentage of revenue to be 41 to 42%. Stock-based compensation to be 120 million, so roughly in line with what it has been over the past couple quarters. And as we talked about earlier, they really lowered that stock-based compensation recently, even as they're growing their free cash flow. Free cash flow margin to be in the mid-teens. Uh, who knows what that means? If it's 15, it's slight growth. We'll just have to see. But from this, in my opinion, it seems that the management team is very optimistic about the future. Next, if we think about some of the strengths and weaknesses of Shopify, the first strength for me is how the platform continues to become more and more valuable as more merchants continue to join, and creates this network effect. Second, they're a subscription based business with a lot of fees. So their gross margins and their profit margins are going to be high, and their profitability is going to continue to grow from here. Third, they're expanding into AI and providing these AI powered tools to their merchants to automate marketing, help them with product descriptions, and even solve some logistics problems. Fourth, it seems like Shopify Plus is really starting to gain traction. They signed Reebok, Champion, FC Barcelona in the last quarter. Then they obviously have brands like Allbirds. They have Kylie Cosmetics, which is Kylie Jenner's cosmetics brand. So if they can continue to sign some of those big merchants, that's more Shopify Plus subscriptions. That's more POS Pro, point of sale Pro systems around the different shop locations that these merchants have. And obviously, then the fees from all the payment processing will add a lot to that revenue. And then fifth, they have very low debt and a really strong cash position, so they can continue to invest in future revenue growth. Now, if we think about the weaknesses, first weakness is the stock valuation today at $123 is, in my opinion, high. I would say that shares are overvalued at these prices. Second, we have a very high dependence on small businesses for Shopify. The core customer base of Shopify is small businesses. So if we go through any sort of economic downturn, small businesses tend to get hurt. So that could be seen as a negative for the company. Another weakness that's often brought up is Amazon, um, as in Amazon being a competitor. But in my opinion, it seems like Shopify stores and Amazon uh, kind of exist side by side. Merchants choose to go for both. And I think Shopify provides such a good personalized experience that Amazon just doesn't. So, what's my action plan with Shopify? I currently doubled my position. Um, it's around 8.6% of my portfolio. I was buying this company, uh, I think May, June 24 through September 24. So I was buying it in this range for 60 something dollars. My average cost is $61 on this company. At current prices, I'm happy just holding. I'm not selling because of the future growth for this company. But if we see any major dips here, let's say down to $70, $80, I would likely add to my position. But overall, in my opinion, Shopify is such a high quality company. And again, in my opinion, I think it's a must own company for the next decade with their incredible growth, such a high quality service, subscription based model, sticky. Um, Overall, I wouldn't want to miss out on this. As I said, currently shares are a bit overvalued in my opinion, but any dip, I will likely be adding to this one. And I'm really excited to see what they can do with Shopify Capital, their lending or their loans. That could really be a profitable segment of their business in the future. But that'll be it for this video. I hope you enjoyed. If you found value in the video, let me know in the comments below. Subscribe for more videos in the future, and see you in the next one.